everybody? Michael Talento here with Legion FX and wanted to make this video, guys. This is going to help everybody out there just distinguish some of the terms that we're using and just give you guys an idea of how we're looking at the market. So you guys know how to approach specific things, specific trade analyses that we put in our Telegram chat. So a lot of you guys will see, when we see a profitable trade setup, we'll put our trade analysis and what we believe the trade is going to be doing, or what we're actually doing within the trade, and we'll use terms and we'll use different things like risk and stop loss. And I know a lot of people have been struggling with the difference between the two, so like I said, just want to make this quick video so everyone understands. At least you guys are going to show you guys what we are seeing in the market, and how we approach different things and why we use these terms, guys. So this is CAD JPY, Canadian dollar to the Japanese yen, guys, and this is just an example. And I pulled this up specifically because I wanted to, this is exactly what we look, how we look at the markets and why we do what we do specifically. For example, guys, so you guys will get a message in the Telegram. It'll pop up, right? It'll say the pair that we're looking at, Canadian JPY. It'll give you where we entered the market. So usually, the entry price of where we personally entered the market. So for example, 87.117 would have been an entry price, our entry on this pair. And that's this red line right here, guys. So I have our entry marked up at the red line here. And for, whether you have been with us for a while and you understand our trading style, or you're brand new and you don't understand our trading style, totally fine. This might look a little like a lot to you right now with some of these lines going on, but don't really worry about that. I'm just going to explain to you guys. So you're either going to see two things, right? You're going to see the pair, you're going to see the entry, and then you're either going to see a stop loss or a risk. I will be honest, guys, the majority of the time, we put risk. We use this term, risk. And the reason we do that is for this reason specifically, guys. So these yellow lines I have marked up here, this is our zone. This would be considered a support and resistance zone, a reversal zone that we're looking for within the market, looking for the market to turn around in this zone here, these yellow lines, right? And this blue line here is our trend line, right? So this is our uptrend. Price is following this uptrend very nicely, right? So we have our support and resistance zone. We have our trend line. And so let's take this at the approach that we're watching the market currently. We're seeing it going up. We kind of see it come down, right? And we see it coming down. We see the opportunity to buy. Right, we like where price is at this 87.117 mark. We think it's going to reverse here. So we do our analysis, guys, and we calculate, okay, this is the bottom of our zone, and it also lines up with our trend line. So that's kind of our safety net, right? If price goes below this, most likely it's not going to go up like we intended, right? So we place a buy position at this red line here, 87.117. And we're looking for a market to go up. We're looking for it to go bullish. It's going to reverse. And when we do our calculations after we enter, right, we see to the bottom of our zone, bottom of our trend, we have about 30 pips, right? It's about 30 pips to the bottom of that zone, guys. And like I said, with our trading style, if price were to close below our trend line here, then that tells us that the trend doesn't want to go up anymore. It probably wants to reverse and go down now, right? So this is the 4-hour chart, guys. You have to remember, we're on a 4-hour chart. A lot of our analysis is done off the 4-hour chart. So we use the term risk 45 pips, guys, because we don't actually physically close trades most of the time. There's different situations for different trade setups, but this is the standard one you guys are going to see within the Telegram. We don't close our trades unless the candle itself closes below our marked zone, right? So we always have our safety net drawn up, whether it's a trend line, whether it's a support and resistance zone, whether it's a Fibonacci level. Like I said, really just depends on the setup. But for this one specifically, it actually is a support and resistance and trend line. They line up perfectly here, right? So that's our safety net. So as price comes down, right, we're getting into drawdown. We're in some drawdown. We're in some drawdown. Right here, we're about 30 pips of drawdown, right? So we always are going to add a little risk. We're always going to let you guys know, have a little cushion below our zone here, right? below our zone just in case it wants to push, right? Because it's 30 pips to the bottom of our zone. But if price closes below it, it's going to be, a few extra pips. So we always calculate 10 to 15 extra pips on that, depending on the pair, depending on like the setup, depending if there's news or not, right? So there's a lot of factors that go into this. But for your guys' understanding, we say risk 45 pips. That does not mean put a stop loss or we're going to exit the trade if it goes 45 pips and negative. That's just saying that when you guys get into the trade, when you guys see our alerts hit the Telegram, that's just letting you guys know, okay, so there's a 45 pip risk on this trade. What lot size should I determine? What lot size should I use in order to be able to leverage my account correctly, not over leverage, but also be able to, be able to have a predicted like drawdown, an expected drawdown. So you guys can expect to see 40 to 45 pips of drawdown with this trade. So you guys should use your lot size according to that. So if you guys put a 0.1, you can expect to see negative $45 of drawdown potentially on this trade. So you have to ask yourself if you're comfortable with $45 of drawdown, right? Depending on your lot size. That's if you use a 0.1. If you're using a 0.2, it would be $90 in drawdown, right? So ask yourself that if you're comfortable with that type of drawdown on this specific trade. If you're not, then lower your lot size, guys. Don't over leverage. There's no reason. If you're and I'm telling you guys this right now because there is a few trades where we've experienced where they go 100 pips of drawdown. Yes, it's not fun. It's not nice. But you should never be in 100 pips of drawdown and be in the risk of blowing your account. If you're in 100 pips drawdown and you're going to blow your account, you over leverage. Point blank, period. All right. Trust me, guys, trading Forex becomes a lot easier and a lot less like anxiety when you're in drawdown that doesn't stress you out. When the drawdown you're in, even if it's a good amount of drawdown, you're not stressed about it because it's not a big portion of your account. So keep that in mind, guys. All the wins, even though, maybe a $10, $15 win may not be exciting, they add up. And if you guys have seen in the Telegram that we are more accurate than not, I would say we're probably about 75 to 80% accurate on our trade calls. So if you guys are under leveraging, and being smart with your risk, those will add up and you guys will see significant account growth. I bet on it. So that is the whole reasoning, that is the whole explanation behind the risk factor stop loss, guys. So you will see on some occasions, instead of risk 45 pips, you'll see stop loss or SL 30 pips, right? And so that in that case, we would be giving you, and most times we'll probably give you, if we do put a stop loss, we'll give you the specific price. Like for example, if we did this trade, and maybe guys, and the only time we would really use a stop loss is if, like I said, is a specific trade situation, maybe we're not like for sure on, right? Or maybe, the market is not, it's something a little different than our normal setup, or maybe we're going to bed, we need to get some rest, and we're not going to be monitoring the trade for you guys, so we set a stop loss. Those are really the only times we'll use that stop loss. But if that case happens, guys, if you see SL stop loss, that actually means physically place a stop loss on that trade, meaning there's a section when you place trades for a stop loss, to input a stop loss. So say we are going to give you a stop loss at 86.82, which is this yellow line here, then you're going to actually put that stop loss at 86.82, right? But for this instance, say we put that stop loss, you guys see how price, like, it shot down, but we were buying. So we were buying up here, and price went down and hit the stop loss, right? Even if we had it below the trend, it still went and grabbed that stop loss. And then it shot back up. When price closed, guys, it closed above our trend, and it closed above our support and resistance zone. So this is still a valid trade. If we were in this actively, we would have held this, even though it went past our zone, because when the time the candle closed, it closed above. And then if you guys would have held it, and you guys can see, this thing just continued up from our entry, it continued up I mean, it went up like, that's 350 pips, but the move to the top of our zone, that's a solid 60 pip move, guys. So that we would have caught off this trade if we, for holding. But a lot of times, right, if you set that stop loss, it comes and stops you out and then it shoots up, guys. So that's why we rarely use stop losses, because more times than not, you see this specific situation happen. They drive price down, they grab your stop loss, they trap equity, and then by the time the candle closes, they just wick it back, closes, and they go the direction that price actually wants to go. And then half of the people who were buying here end up getting stopped out and their money taken away because they had their stop losses set. And the smart people like us who are watching the trades majority of the time actually got the win off of this trade because we weren't scared and we weren't over leveraged, right? Because if we were over leveraged, I mean, that's about 55 pips of drawdown. So yes, the risk is 45 pips. So yes, it was a little more than intended, but obviously it followed our rules. So just keep that in mind, guys. We're not like geniuses. We can't predict every single thing. But there's reasons why we do what we do, very, very specific reasons. So hopefully this video helped you guys a little bit in understanding, guys. But just remember, risk, guys, you're going to see risk majority of the time. That's just giving you an idea of what lot size to use, the potential drawdown you're going to see. Stop loss, that actually means place the physical stop loss. But don't place a stop loss if you see risk. Unless you are going to bed or you're going to be out, right? Then you can kind of calculate your own stop loss. What I would do for a stop loss, if you have to set one, guys, is put it below the previous low. So like, for example, like if we were buying this and we would have seen this, I mean, a stop loss I probably would have looked somewhere around here, at this low here, off these wicks, and put it lower here. I would have hoped I would have done that. I don't really know in the actual scenario. But yeah, just always give yourself breathing room with these stop losses, guys, because, you might get I mean, just off that wick alone, that was a 25 pip wick, right? So just off that wick alone, I mean, 25 pips down. They definitely went and grabbed some stops. I guarantee it, guys. So just keep that in mind. If you guys have any questions, feel free to ask us. But like I said, I hope this video clears things up and helps you guys, because I know a lot of people, they see the risk and they put their stop loss at the risk and then they get stopped out. And they lose the trade when the people who just held it, obviously profited off the trade, guys. So keep that in mind as we go into the rest of December within the new year. And, you guys should see some nice gains on your account. So hopefully y'all have a good day. Hopefully this helped. And we will see you guys on the charts.